us now to answer your tax questions is Tony King of King and Associates. Good morning.
Good morning. Good morning.
So people should spend their snow day gathering all their papers together, right?
There
Getting
you go.
ready for taxes.
Might as well. If you're going to be home, you might as well do some work at home.
That's right. And if you have questions for Tony, you can write them all down. We have our first one this morning. I'm in the process of remodeling my home in 2016. I have spent $16,000. How much of this can be filed as a deduction?
Unfortunately, capital improvements on your primary home are not deductible. If it was an investment property, a rental property or something like that, it would be deductible. But for your personal residence, unfortunately, none of that is deductible.
What a shame.
What it does, it basically increases the cost of your house.
Right, the value of it too. Right. All right, well, I am claiming my 76-year-old mother on my taxes this year. What is the max amount that she could receive from her retirement pension in order for me to claim her?
Well, the issue here is a matter of providing more than one half of her support. So depending on how much the pension is, if that dollar amount puts her over the threshold of providing more than one half of her own support, then the son or the daughter cannot claim her. But technically, if you have more than $4,050 of gross income, then that person will not be able to be claimed as a dependent. So depending on the amount of the mother's pension, the taxpayer must provide more than 50% of that person's support.
All right, this next question goes along sort of with the first one. My husband and I own a townhouse, which we recently renovated to prepare to rent. When preparing taxes last year, we were not able to deduct the renovations. TurboTax stated our income was too high to deduct rental costs. This has not happened in the past. What must we do to position ourselves to be able to deduct rental expenses?
Well, similar to the other question, basically what's happening is that rental activities are also known as passive activities, and the Internal Revenue Code states that if you have passive activities, for example, real estate, and your income exceeds $150,000 as a married filing jointly, then those passive activities are not deductible. So it sounds like that particular taxpayer is saying that their income exceeds the IRS threshold for deductibility of passive activities.
All right, can't do it. Well, my husband has been getting disability and I work. Should we file jointly?
If there's anything, the disability income, I'm assuming that it's going to be non-taxable because most disability payments are non-taxable. And depending on the taxpayer's gross income, it may be beneficial to file jointly. But I'm assuming that this disability payment is not taxable to him, and therefore the only taxable income would be the spouse's taxable income.
All right, we have a question about tax breaks. Are there any tax breaks for single people making less than $50,000 with no children?
Well, at that income level, you don't qualify for the earned income credit, but I can say that it's possible that if you're in school, there are educational tax credits, and of course one of the biggest tax benefits is to contribute to your retirement plan. So every dollar that you contribute to your 401k or your 403b, that's a dollar that is not reported as taxable income. So that could help someone in this particular fact pattern. All
right, you are knee deep in the weeds of crunching all these numbers. We will see you again. Thank you so much for coming in this morning.
Thank you.
You are very welcome. And if we didn't get to your question this morning, we'll answer it next week. So make sure you keep them coming. You can email tax questions directly to taxquestions@wbaltv.com. You can go to our website, click on Consumer Alert. And if you'd like to get in touch with the Kings, you can call them at 410-486-4500. You can also check out their website, king-king.com.